Hello, everyone. This is Justin Smythe from nextbigtrade.com. In the final video for this week's newsletter, I wanted to discuss the internet bubble from late 1998 until early 2000 and how it may draw some similarities and perhaps a good learning example for the current new bull market in artificial intelligence and semiconductor related stocks. The first thing I want to look at is the NASDAQ from late 1998 until the early part of the year 2000. And you can see in this chart that around October 1998 is when a fast bear market in the overall stock market ended. And then there was a power trend higher in the market after October 1998 until early 1999. You can see in the chart how the weekly price action was trending above a rising 10-week moving average, and the market accelerated sharply higher coming out of that bear market. Then during the middle of 1999, from around late February 1999 until October 1999, there was a kind of a gradual uptrend in the overall market, but there was a lot of volatility, and the market was kind of digesting a lot of the gains from that late 1998 period where there was a sharp move higher. So the price action trended above the 30-week moving average, but didn't really wasn't strong enough to trend above the 10-week moving average. And then finally, in late 1999, when the market went into a blow off top, you had another power trend above the 10-week moving average, and this was another super strong period for the stock market where all these internet bubble stocks really took off, and you can see the NASDAQ itself trended above that 10-week moving average up until around March of the year 2000, and that's really where the bull market ended. And then a stage three topping formation started to form in the year 2000, which ultimately led to a stage four downtrend towards the end of the year 2000. So again, there was two power trends during the later stages of this internet bubble bull market. One of them was after the 1998 bear market, and the other one was after kind of a sideways choppy period in 1999 where the market really took off in late 1999. So looking at the way some of these stocks behaved during this period, you can see the overall market's influence on individual stocks. And eBay is an example. It IPO'd in late 1998, right around that bottoming period in 1998, and really just blasted off higher. You can see the explosion in volume coming out of the IPO for this stock, and ultimately the stock blasted off into early 1999. And then when the market was struggling in 1999, it had an impact on a stock even like eBay that was so strong. This stock simply went sideways, for the rest of 1999. Tried to move higher when the market was doing really well in the early 2000s. Ultimately failed when the market rolled over, and that was it for eBay. So eBay really had all of its gains during that 1998 strong market period. You can see how it trended above the 10-week moving average as well. So the best stocks tend to obviously outperform the stock market, and eBay was trending strongly above its 10-week moving average as well. Two other stocks that did really well during that 1998 period was Microsoft. Came out of a consolidation in October 1998, blasted off. Again, you can see the choppy price action during the bear market, and then all of a sudden when the market gets better, Microsoft blasts off above the 10-week moving average, has a multi-month uptrend until early 1999. And then again, when the market was struggling more in 1999, it has a direct impact on Microsoft, where Microsoft's not really performing as well, while the market's doing the same thing. And Amazon was another example. Amazon comes out of the consolidation in October 1998 blasts off again above the 10-week moving average, trends higher for multiple months, and then struggles when the overall market is not doing as well in 1999. And then turning to a couple examples of stocks that did really well in late 1999 during that massive blow off phase. Qualcomm had its blow off, during late 1999, moving up super sharply above the 10-week moving average. And, ultimately this was a major winner above the 10-week moving average during the early 1999 period as well. It just didn't do as well during that choppy period. You can see here during the choppy period, Qualcomm is still kind of hugging its 10-week moving average, but once the choppy period is over, around October 1999, it really blasts off higher. So, the overall action of the stock market just greatly influences almost all stocks. And notice again, these big winners tend to trend above the 10-week moving average. So we're seeing that here with Qualcomm. AMD is another example. AMD broke out in late 1999, stage 2 breakout right in October, right when the market started really blasting off. And this stock blasted off above the 10-week moving average as well, all the way into the early 2000s, and started to top around the same time that the overall market started to struggle in April, May of the year 2000. VIAV was another example. You can see the blast off here in that late 1999 period, starts to really accelerate above the 10-week moving average, and then rolls over and has trouble right when the market's topping in March 2020, the year 2000. And then finally, CHKP, again, another one accelerating higher in that late 1999 period, and then starting to struggle in the year 2000, when the overall market was struggling as well. So again, learning example here from the internet bubble. The periods where the overall market was supporting stocks were the periods where, all these stocks did the best. Late 1998 and late 1999. The best stocks of this time period trended strongly higher above the 10-week moving average. So in terms of what's going on right now with the market, NVIDIA has been trending above the 10-week moving average ever since January 2023. So definitely one of the strongest stocks in the strongest sectors, and, showing its strength by trending above the 10-week moving average. And finally, talking about the duration of these moves, you can see that, during each of these time periods in 1998, 1999, it was a multi-month uptrend where stocks had, 5-6 month moves where the overall market was supporting these individual stocks. And even the best stocks trended higher for more than a year, from early 1999 until early 2000. So the best stocks have the tendency to trend for not just a few weeks, but, multiple months when the market's behaving. And, that's really where significant gains can be made, because the market is supporting stocks, during a longer time frame. So in the current market, if we continue to get a stage 2 uptrend in the overall indices, then these leading sectors and stocks are really going to flourish because they've got the overall market behind them. So that's really a key thing to understand, is that without the overall market support, even the best stocks tend to not do as well. So always keep that in the back of your mind when you're studying the overall market and trying to figure out, when is the best time to trade individual stocks. And it's always during stage 2 uptrends in the general indices.